This episode talks about global CEOs visiting Beijing as China signals openness, Asian governments taking extreme measures amid the global oil supply crisis, and a cloudy outlook amid the US Iran conflict. Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, the founding CEO of Lundgren's Capital.
This is Sound Economies with Mel and Peter, a weekly East Meets West podcast by Lundgren's Investor Insights. Join us as we analyze developments in major economies and financial markets globally.
Hello, Mel. How's the week been so far?
Hi, Peter. I'm actually coming back from a brief vacation. So it's also refreshing to see a different part of Southeast Asia and how things are locally, especially with what we have with the global oil crisis. And yeah, a lot of takeaways that I can discuss in a bit, but it the situation there, I visited Indonesia. Retail pump prices there are much lower than where I am in Manila, and it's mostly a function of subsidies. So I saw firsthand how good and how bad that is as far as consumers are concerned. So quite a new perspective that I can bring to work. How about you,
Yeah.
Peter? What have you been up to?
Again, still busy in several dimensions. What's going on in the markets and in the world is one of these classical periods where it simply requires a lot of attention and a lot of time, also together with the clients. I don't know if that's a reason. It would be easy to say yes, but we have good inflows in our defense fund, and that's actually, of course, interesting from a couple of perspectives, also for our own business. So yes, it's busy in many ways. Let's see if we can sort out the world in half an hour. But we will take off as usual in the Far East, and this time, as we do have everything in a bit of a perspective of the military action in going on against Iran and the consequences and all the sort of whatever it has of spillover effects. But China was it is a huge economy, and what are sort of the latest assessments?
So actually, over the weekend, several CEOs of global multinational companies headed over to Beijing, amid, of course, the soaring fuel prices, and I assume the flight tickets as well were very much more costly than what they would have been used to. And that was really to attend the China Development Forum. So it's a state-sponsored gathering. Um, that it should have been a precursor to Trump's visit, which would have been happening this week. But yeah, we all know that that has been postponed in light of the U.S. military action in Iran. But yeah, that did not stop major companies executives from coming over. Among them, of note, is Apple's Tim Cook. So he flew to Beijing, among many others, particularly from the UK, South Korea, and German conglomerates, heading over to Beijing, where they talked with Li Qiang, the premier, for strategies on how to support private sector growth in China. So this is a recognition of China being too big to ignore as a market. We all know that. We've been saying that for so long. And it's coming from a much friendlier administration in China that is their commitment to be more open, more friendly to private sector, the real private sector players, and not just state-owned corporations, which we know isn't really the sustainable way to grow an economy. So it's now becoming, I think there's an evolving view on China, especially in the context of where we are right now. It's becoming a bastion of sobriety and growth and stability when it used to be the US for so long. And amid the US Iran conflict, China is emerging to be a much more attractive destination, not only because of its really huge domestic market, but also its cheap labor, manufacturing, and access to the rest of Asia, basically. And the signal that these 80 or so global CEOs are in town represents renewed interest in China. And in turn, Chinese government officials have committed that they will provide easier access to domestic labor, domestic services sector, which we know remains under control by the state. So they also committed to invest more or to buy more global goods, especially in healthcare and high technology and digital products. So
Mm.
it is a step in the right direction, especially when China wants to sustain the 5% level of growth annually under these circumstances. And it's, of course, refreshing to see amid all the uncertainty and volatility with the global oil prices. This is also a precursor to a regional forum hosted by China. The Boao Forum is also ongoing right now. So more discussion on development and innovation and cooperation, which China is looking to be more participative in, trying to lose its reputation as a closed economy, as a very
Mm.
reluctant to trade. Now they're
Yeah.
really signaling more openness, and of course, that is good for investments and the global markets.
It truly is. This is one of these events in China where you say is really worth to notice.
Mm-hmm.
To move so many extreme high level company CEOs is very difficult. This
Yes.
is a signal, and it is also the signal that the China bashing times they're over, they're gone, um, and for many reasons, the world is reallocating. Yeah. As
Mm-hmm.
or readjusting or whatever we will say. And of course, Trump has sort of forced it to become faster because he's sort of basically excluding US from a lot of good things in in the world. Yeah, and we have the good old story. Europe is in a completely stillstand, and
Mm-hmm.
there's no way out. And then all of a sudden, then simply leave China as on a relative basis and in absolute terms, the interesting destination all of a sudden again, yeah.
Yes.
And the economy is advanced. Also the development in huge parts of China is simply advanced. And now we are talking AI. AI is on top of the agenda.
Mm-hmm.
You simply find it in China since decades. Now, it has been a top priority since decades, and not only 10 years, but more. And it's not, it's talked about in Europe, and that's it. As it is not on a priority strategic agenda in the same way. So only these not coming but current strong new trends. Um, they are much more at hand and advanced in China. And this is what, if you read interviews with high-level CEOs from around the world, this is what they recognize when they visit China.
Mm-hmm.
So yeah, this is what you're referring to there. Is it is really it's a big change for investors. They should give it as they should look at it. Really, truly, it means a lot. In the middle of everything and the world facing a difficult time with higher energy prices, I'll say it's or energy supply.
Yes.
That is after all really worth to have a look at. But we can't really avoid the consequences of high energy prices. Mel.
Yeah. Actually, Peter, China's neighbors in Southeast Asia are turning to more drastic measures to
Yes.
offset or to allay the inflationary impact of this global crisis. We all know that Asia in general is the world's biggest importer of oil. At least Southeast Asia particularly, we rely a lot on our Middle Eastern neighbors for supply. And now that the supply is inaccessible through the Strait of Hormuz, with Iran blocking access, uh, it's up to each government. Well, you can't really produce oil domestically, especially if you don't have them. So the solution is really on the demand side, curbing it. Here in the Philippines, just 2 days ago, the president has declared a national energy emergency. So drastic fuel conservation and energy conservation measures. There's also a new law that would allow the president to suspend excise taxes on fuel. There are discussions to further bring that pump price down by removing the value added tax, which is 12% of the value of per liter of gas and diesel. It's
Yeah.
been tough. Gasoline prices have been up 60% the past month. So
Mm.
that's crazy to hear, but we are in extremely different times. Protests have been rolled out, and there are also discussions to procure supply from Russia, from Venezuela.
Yeah.
So there's also a revival of joint oil and gas exploration in the South China Sea with China. If only it would avoid the situation in the longer run. In
Mm.
Indonesia, they are heavily subsidizing fuel prices for consumers. So the hit isn't as sharp as far as consumers are concerned, but they have to manage the cost at the government side. There
Mm.
are now discussions to increase export duties on coal and nickel, if only to offset the revenues needed for the subsidies,
Mm.
and even a proposal to cut government officials' salaries to generate savings, basically. So, very extreme responses. Although the Asian Development Bank is trying to come to the rescue, um, just hot off the press as we went live for this podcast, they released a research report where they ran some scenarios about the global oil supply disruptions. And they are seeing if the disruption is resolved in 3 months, so that's by June, the regional GDP would decline by zero point 0.3 percentage points. So that's sizable. But if it stretches to a full year, the decline in production would be in output and regional output would be 1.3 percentage points. So that is really painful, especially for developing economies
Yeah.
here, which, a lot of that growth fuels jobs and therefore incomes. And
Yeah.
it is dire if this scenario really happens, although we don't really think so. Impact is harshest on Southeast Asia, and the ADB is trying to step in by providing cash support, so liquidity
Mm.
support for economies, for
Yeah.
countries in terms of importing oil, and for the private sector, some trade and supply chain financing options in case they need to have guarantees or extra cash for to cover the higher costs of fuel imports and fertilizers as well, because we know that's also largely affected by the closure of the Strait of Hormuz. So these are really full crisis mode response as far as Asia is concerned. Yeah, you can't really do much as far as generating your own oil supply. So
Mm.
really the curbs are on demand side, and yeah, that will also not bode well for growth, which countries really want to achieve. But here we are. So we are trying to make do of what we have in this situation, although it is looking like I'm not gonna say a doomsday scenario, but they're preparing for the worst, Peter.
And as we're just talking about China, also in that context, it might be worth to mention, as you say, the Asian dependence on oil is well known. It's also the same, or partially the same for China, actually. But
Mhm.
they have built so big reserves of
Yes.
oil that, as we're talking about, giant reserves of oil, actually to counterweight exactly this situation. They have prepared. They have for a very long time developed the green part of the energy production
Yes.
significantly. So they have become more independent or also simply less dependent on oil. And further, they still have huge power production capacity based on coal. Now, coal is of course not a good story for for the green part of the world. Yeah, as a sort of
Yes.
when we talk about green energy, yeah. But and clean energy. But they have. and it is an alternative to sky high oil prices, is simply to use more coal, and they produce coal themselves for for power generation.
Mm-hmm.
China is probably among the lesser affected, and earlier it was much tougher for China when we had this type of sudden energy price increases or energy crisis, whatever. This has become much better. Secondly, it is interesting. It is fascinating to observe in the Far East Asian region how crises are handled. There is taken action at a pretty early stage. Yeah, and it's actually well, it's remarkable, and it's noteworthy. It's good. It's good. Yeah. Also, it's actually a positive thing. Also seen from an investor perspective that governments are acting. They're doing something.
Yes.
That is as it's yeah. It's just in as a it's important and trying to manage the crisis. And of course, we've been bullish on emerging markets, and we've talked about the upsides of also taking pace this year. It is natural the areas, the segments or economic areas, whatever, that are sort of promising the most are typically also those who then will be the most hurt of a certain
Mm-hmm.
counterweight or setback or whatever like this. It's just what we observe. If we sort of saying dive a bit into to the current let's call it crisis, as we talked about a couple of times,
Yes.
we have this end of last year talked about a correction in the stock market, 10 to 15% in general. We could not really say where it should originate from. It was just a feeling that something could happen, and the market was sort of simply mature for a correction. Not being able at pointing at what sort of should be the reason. It was just the market was ready for this kind of correction, and this is basically what we are seeing right now,
Yes.
depending a bit on which stock market. But anyway, we didn't at that time forecast that US would make a sort of a
Of
military
course.
reaction against Iran, and by no means. But the market reaction we were sort of talking about and waiting for. I would say we are now 4 weeks in the military action. This is around the point where it starts to be a bit painful for the markets, for economies, um, and yeah, we here we try to solve the world and the financial markets in 27 minutes or 30 minutes, whatever we give it. But we are sort of as a state. I would say this is where sort of the pain starts and is linked to say with the oil price at the current level, it's also where it starts to be painful for economies at some time. Yeah,
Yes.
this is and it will reflect a bit into to the mood in the stock market. It's there's no in sight. It's either say, okay, we have now priced so many bad things in the market or in the prices that we are now talking about maybe an extended period
Yeah.
with very high oil prices, about 100 US dollar per barrel. So is it now to say, okay, we have actually priced all these negative factors in.
Mm-hmm.
So what to do now? And it can be now saying, okay, should we increase a bit on risk again? Saying, okay, it is a bit speculative. It's a bit tough. It's a bit tough call. But we are actually saying, okay, if the market, and that again is we are repeating ourselves, is the market had been very bearish, this situation would have generated a loss of 25% in the stock portfolios and global stock markets. This is not the case now. We are we're down, but there's still some stability, and this could actually be if one as investor has a trust that something will be handled or decided about the Iran US
Mm-hmm.
situation, then it's time to increase a bit again in the stock portfolio. If the signs are more alarming, and say, okay, investor trust in an increased conflict, then it will be too early to do something. And this is, of course, this is interesting. We are actually sort of net taking everything into account, saying, okay, a lot of bad news have been priced in now. So we would go for a higher market again, and would add uh, a bit of risk actually. So at this level. And this is a good question. Do we see signs of any peace or ceasefire? It's completely hopeless to trust something. The U.S. government claim they're negotiating with Iran, and I'm saying they're not speaking with
They're not
anybody.
interested.
This is a very sort of typical Trump situation. Yeah, we see this as there's a slightly overweight of sort of the net of all expectations are too as they are net overweighted too negative now, and actually the world could move forward, but it's not sure. And US is showing they are with the action. They are also working on a backstop. Yeah,
Mm-hmm.
they are deploying more um, military troops to the Middle East. The Delta Corps is probably already there, but it's not big, but they're very fantastic in handling nuclear sites. So that will be their journey. Then there's already 50,000 troops, U.S. troops in the region. They are bringing in, like, increasing with the 82nd Airborne um, Division, and these are high caliber
Mm-hmm.
soldiers. As they're bringing in more MUs, and that is special forces again. Probably around 7,000. Some will arrive this week.
Mm-hmm.
Yeah, the 82nd Airborne Force. They arrive from they asked to leave and get ready. They take only 18 hours, and they are anywhere in the world. Pretty flexible and very high standard soldiers. And then we have part of the Marine units. They will arrive in from today. We expect what we see also, we are not in the command center, yeah, but what we see of messages and news, it looks like
Mm-hmm.
in 3 weeks. They're pretty far away. That means that the US will increase from 50 to 60,000 troops in the region, but the last 10,000 troops are really high caliber. Um, the Marine units could be designed to take over the oil, as the Kak oil island, the oil island of Iraq. That is basically controlling around 85% of the total oil export of Iran. Sorry, the Iran export. We don't know, but if US decides to deploy troops on ground,
Mm-hmm.
um, it will that will be a totally different price also in terms of people, of course. And then we see an extended situation. We don't see the war spreading in the Middle East. It will still be everybody will do everything for keeping it on Iran um, sort of surface, and not let it spread to anywhere else. This is what the big effort will be. So, and that is this very focused, and that the rest of the Middle East is actually trying to stay quiet.
Yeah.
Um, is actually where we argue that it is a huge isolated military action, probably a bit bigger than Trump had imagined.
Yeah.
But this is also why we actually have a bit of confidence in the outcome. It can be that Iran will make a ceasefire, and Iran will claim sort of its victory. Uh,
And then
that is
Trump will
possible.
claim also
Yeah, it can be that only certain ships are allowed
to
to
back.
yeah to come out in and out of Hormuz Strait. We don't know, but that could be a situation as well. It will not be a long-term stable situation. There we know something will revert. But actually we have a bit of confidence in saying, okay, it will not spread, and there will be a solution, maybe a negotiated ceasefire solution where not US necessarily is a big winner,
Mm-hmm.
and it could be with some conditions on the Hormuz Strait, or secondly, sort of the backup that is in 3 weeks, 3 to 4 weeks, US will actually do a bigger military operation into Iran, and that will cause havoc, and there we will for sure, if not before, step out and reduce risk if that is what is sort of in the cards. But we will see and we try to maneuver. This is how we see the world right now. It will stay on a crisis mode, and current oil prices are too high
Yes.
just to live with. So they will damage and destroy some global growth. But we see it isolated, and we see the world returning to a more normal life again at some time. So that's also why we actually say, okay, too much negative factors could be priced in right now, and we would add a bit on the stock portfolio.
Mm-hmm.
Yeah, long talk, but it's when the world gets serious, yeah, and we need to share what we share here. Again, as always, it is also what we share with our clients directly on a bilateral basis. Wealth clients is also what we use when we consider our invest portfolios. So this is basically the view we have here. So right now, Mel, it is cloudy. There's no sunshine, so to say, of
It
what we
is.
would call tactical or short-term sunshine. There's not. It is all about for investors to have a try to generate an opinion, say, okay, how does the long-term view look like? So
Mm-hmm.
what is actually the long-term outcome? How do we see the world in a way where we say, okay, the trust in the economy. Let's put it this way: the trust in the
Mm-hmm.
markets. What do we say in Asia?
As far as Asian economies are concerned, there's not a lot to do as far as supply,
Mm,
being the biggest importer, but the demand side interventions introduced by governments has been encouraging. The fuel conservation measures and the search for alternative sources of fuel, if the war does go on for quite a while, is
mm,
a good move because it helps mitigate future longer term supply constraints. Although of course the hope is that this would be done sooner than later, it is
mm,
a pleasant surprise that markets have been holding up well. Um,
mm,
Stocks have been down, yes, but not to an extremely large level or dip. It's been
mm,
managed quite well, and inflationary impacts are what we're looking out for. Although central banks so far have done the right thing, we did say that central banks should stay on hold and watch out for what's happening and manage liquidity while they're at it. And that's exactly what they've been doing here in Asia. So
mm.
that's the right thing to do so far.
So in terms of sunshine, as mentioned, we still have a good trust and faith in sort of the more fundamental long-term perspectives. Of course, we recognize short-term it is completely clouded,
Mm-hmm.
but we would actually say, okay, for 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 people who have sort of the kind of appetite, we will actually increase a bit on the risk under the certain circumstances we're seeing right now. And the reason is we see too much negative risk is priced in the market. So this is how we see it right now. It can change at any time. In particular, sort of, there's a bit of sort of market reacting on a different wording from US and from Iran, and that is, of course, they're going in all directions. We will see this volatile situation. We live with it. Yeah. So this is how we see the world. And thank you so much for sharing, Mel. And we will for sure stay tuned every day. That is sure. Yeah. And thank you to your listeners for listening in to to this as well.
Thank you, Peter.
Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Longines Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts. Longines Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.